Well, folks, it's official. 100% confirmed stock market crash incoming. ChatGPT has reportedly predicted that the stock market will crash on March 15th, 2023. Yes, it's a 100% confirmed, and we know artificial intelligence knows everything. So this is, it is what it is, okay? In all seriousness, folks, we got to talk in this video about a stock market crash, okay? I know it's on a lot of folks' minds, right? A lot of people kind of think about this, they worry about this. And I want to run you through the 4 different scenarios that if we were to actually get a stock market crash this year at some point, what would have to happen, okay? And there's 4 different scenarios I want to run you through just so you're prepared mentally for like what could transpire if it transpired, okay? And I'm also going to share with you the odds that we actually have a crash this year, okay? And when I say a crash, like I'm usually thinking about a 20% plus fall in the S&P 500. A 10 to 20% move, that's usually a correction in the stock market. Anything less than 10% is kind of really like a pullback, we call it, okay? So we're talking 20% plus fall in the S&P 500, and I'll run you through those scenarios. And, you know, there's 3 types of people when it comes to stock market crash, right? One, you got the short sellers that are like salivating, and they're like, their heart starts beating when they, stock market crash, please, 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 okay? Then you got the folks that are scared, right? Because they're like, oh my gosh, what if my portfolio drops 20%, 30%, 40%, whatever the number is, right? And you have that group of folks, right, that are just kind of scared and like concerned about, oh my gosh, like my money is might go down, right? And then you have the last group of folks, which is myself. We're the very, very small minority, right, that are hear that and we're like, okay, awesome. Like, you know, stocks for cheaper. That's the way we look at it, right? We get to buy more shares of companies for a much cheaper price if that was to happen, right? So us longs, we're never scared by that. We're not so insecure that like we need our account profile to say a record number each day, right? We're understanding we're playing this game for the long term, and whatever they want to sell us for shares right now is just a cheaper price than we're going to have to buy in the future, essentially, right? So if they want to send any stocks down, we're more than happy to have that. And so I hope you guys get a lot of value out of today's video. I hope you enjoyed today's video. I appreciate every single person that's subscribed to this. We're going to go through it all. I also very much appreciate every single person that is subscribed over on Patreon. If you're looking to join us on the Patreon, that is pinned comment down there. You get access to all of the stocks I'm buying and selling in the Patreon portfolio there. And we have one of the fastest growing Patreons literally in the world right now. We're up to, I think it's over 750 Patreon members now. That thing, and I just started last month, so we are absolutely growing like insane. We're going to be over 1,000 members here very soon, and and likely many, many thousands in the future, okay? Alrighty, guys, let's get started here with a little comedy off the bat, okay? I saw this underneath that ChatGPT, you know, market's going to crash March 15th, 2023. Time to load up on shorts and get mad at ChatGPT when I get wrecked. That's the truth, man. It's like you don't want to blame it on yourself. You know, you got to blame it on something else. So let's blame it on the Chat GPT, okay? Also, what the heck? Okay, so you guys, if you know about the whole ladder situation, okay, I did get that smoke detector fixed, okay? But I had my ladder out here. Remember I had it out in that video, just I set it up in the background, right? And the next thing you know, my 1-year-old was on top of that thing. I'm like, you kids on a death trip. It's crazy, okay? And also this past week, it snowed here in Vegas. It snowed. Yeah, and I know for a lot of you guys that live in snowy places, you're like, dude, what are you guys doing outside when it's snowing? Like, what's, you know, in Vegas, everybody goes outside. We all start celebrating because it only usually happens once a year or once every few years. So when you get that rare opportunity, everybody's outside, like celebrating, trying to make a little teeny snowball with the teeny bit of snow that falls on the ground. Oh, man, special, okay? Alrighty, so the 4 scenarios that this stock market crash could happen, okay? And then we'll get into my odds and probabilities that this will happen in 2023, okay? The first way you can get there is through real estate really getting really, really ugly. Now, real estate started to get ugly over this past, I would say, 6 to 9 months, but I'm talking about a next leg lower here. Okay, the real estate industry is a massive industry, and it's honestly one of the most important, if not the most important industry in the United States of America, because so many different people make so much money off of real estate, whether it's homes being sold, marketing, whether it's homes being built and how many jobs that creates, whether it's people putting money into their homes and spending money at Home Depot and Lowe's and all these places, and the contractors that do these projects. I mean, it's enormous. It's like the biggest thing, in my opinion, for the U.S. economy, okay? Now, This is in a really bad spot. Mortgage rates, I was looking at this, okay, and I was like, loan amount $300,000. I was just playing around on Google a few nights ago. A down payment at 20%, right? Credit score of 800 plus here in Nevada, and you're looking at almost a 7% mortgage rate. You know, you're looking, this time last year, you were looking at 2 or 3% roughly, right? And so this has made it so unaffordable for folks to buy homes right now. And this is one of just many reasons that real estate prices will continue to come down. Now, when I talk about a potential stock market crash, right, it has nothing to do with like real estate prices coming down some, because no matter what happens in this scenario, real estate prices are likely going to continue to drop. What I'm talking about is something much more severe, but it really starts with mortgage rates. Now, going into this year, I saw a lot of people predicting that mortgage rates would actually come down, okay? And what we've seen is actually mortgage rates really going up. So we'll see how all this plays out. But I'm telling you, if mortgage rates continue in this 7% range or go above 7%, real estate's done. Like, real estate's completely finished in the United States for at least a couple of years in that situation, and prices would drop off a cliff, and the industry in general we'd see epic amounts of job losses and just be in a really bad place. And we're seeing a lot of troubling signs, right? The city I live in, Las Vegas, the main city, right, where this house is. Look at this, okay? Median home sales prices obviously started to fall quite a bit. Number of home sales is down 48% year over year. And inventory is starting to pile up. And the amount of time you're on market is starting to skyrocket, okay? So everything that could be going bad is starting to go bad here in the housing market over the past number of months. I got a home in Phoenix, okay? And this is my original hometown, right? And this is startling, okay? Absolutely startling in regards to Phoenix, Arizona. First off, look at the price drop just since kind of spring, summer, okay? That is pretty darn scary. Look at the amount of home sales. We're down 43.5% in Phoenix when it comes to number of homes sold. Median days on market has skyrocketing, and inventory skyrocketing as well, okay? Not a very good trend. This one is even crazier, okay? Look at how pricing is collapsing in Dallas. Oh my gosh, folks. It is collapsing. This is down 10.2%, but take it from this number, from where things were at kind of in the spring, summertime in regards to Dallas. Oh my gosh. I mean, they were up near 500,000 median sale price, and now 330. They're on their way to, I mean, it looks like they're on their way to the 200s, okay? It looks like they're on their way to the 200s in Dallas. That's an incredible fall. If they go to the 200 range, you're talking about this is the sort of fall that you saw in like the great financial crisis, folks. This is extraordinary. This is absolutely extraordinary, right? Los Angeles. Now, LA is its own market, okay? LA prices are extremely sticky, and that's what makes it one of the most attractive markets always to be a kind of a real estate investor in, right? Because LA, Southern California in general, just is usually very, very strong. But look at this, even in LA, the amount of homes sold is dropping in a very, very rapid fashion, right? Down 44% year over year, 44%. So even in a market like LA, folks are having to pull back and say, I just can't afford a home right now, with these sorts of mortgage rates. And so if this trend continues, it's going to be very, very troubling, okay? And it looks like it's likely going to continue to trouble as long as these mortgage rates are up like this. And look at housing starts. It's fallen off a cliff. Now, the great thing for home builders and for the economy right now is we still have this big backlog from all these homes that were started. These projects are being finished over the next couple quarters. So right now, a lot of the people that are, have jobs in relation to home building, they still have projects. But the problem is this backlog starts to dry up over the next couple quarters. And with housing starts plummeting the way they've been plummeting, this is a ugly, ugly sign. I can tell you, if mortgage rates stay up at these high sixes or even go to the sevens, for even people that have credit scores in the 800s, I'm telling you, this is going to continue to drop in a massive, massive way. And the next thing you know, a lot of these folks that have construction jobs are going to be out, okay? And then they're going to have to try to pile into jobs, for the state and the federal, spending spree that I'll call it, right, for the infrastructure plan. And you might be able to get a job there, you might not. The problem is this creates so many jobs that it would be a lot of jobs people would be out of if we don't pick it up soon, and that's the scary part. And I mean, look at how far we fell in the great financial crisis. Now, I'm not expecting this sort of fall, but I'm just telling you, when real estate starts to go bad, it can go really, really bad. And so is it impossible to imagine we get down to a number like this right down here? I don't think it's out of the realm of possibility, folks. And so this is an extremely troubling sign. And like I said, so much of this is dependent upon mortgage rates. If mortgage rates stay up here, or if they go higher, I'm telling you, these housing starts numbers are going way down, baby. We're going to be like down here. Home prices are going to fall no matter what happens, whether mortgage rates continue to up at these trends, or whether basically housing prices are going to continue to fall, okay? The reason, I'm looking in Vegas, right? And I've been looking for rental property. Not that I'm in the market right now, but at the end of this year, at some point in 2024, I am going to be in the market. But I was just, been trying to track areas and trying to look at pricing and see what's going on. Just trying to get ahead of the game, right? Way before I'm actually going to make a move. And what I can tell you is prices have to come down considerably still here in Vegas. We're not even close to where we need to be. If you try to buy a real estate investment property right now, you're going to be paying substantially more than you can get for rent for that. It doesn't even make financial sense right now. Pricing will continue to come down here in Vegas for at least the next 6 to 12 months. If mortgage rates continue to go up, we could be looking more toward an 18 to 24 month drop. Okay, and so this matters a significant way because this affects the economy and potential job losses. Okay, so that's way number one, is if this housing situation gets far worse, you could see an actual stock market crash. What's number two up here? This is number two. Okay, so the S&P 500 is weighted in, obviously some of the biggest companies out there, right? These 14 stocks matter the most. These all represent a weight of 1% or more in the S&P 500. Now, if we got a scenario where these companies, right, their margins and their profitability, earnings per share, gets worse in 2023 than it was in 2022, and they're reporting drops in EPS, that's another way you could get the overall market to drop considerably, okay? Now, what I'll say about this is that's not very probable. That's actually, I would call it a low probability that happens. I actually believe most of these companies are going to see their margins increase in 2023, and I see most of these companies having the earnings per share go up in 2023 versus 2022, okay? So I personally believe this is not super realistic, but if it is, and if it does play out that way, just understand the market will drop considerably, right? Because at the end of the day, if Apple earnings fall apart, Microsoft, Amazon, Google, McDougal, right, Berkshire Hathaway, Nvidia, Tesla, obviously the market has to go lower in a situation like that. If it's a big drop, if it's a considerable drop, right? I just don't see that happening. I think most of Wall Street's expecting either slight drop or slight up for earnings per share and net income in these companies. But no one's really expecting a huge drop. And so that would be a shock and awe event to the market if we saw some sort of massive drop. I just don't think that's realistic. I think margins and profitability will increase for these companies. Why do I think that? Well, all these companies are going to have, at least decent revenue growth. But not only that, a lot of these companies have cut employees and expenses in a major way recently, and they took a bunch of one-time charges for those that have hit these recent quarters. And so as 2023 rolls along, I believe a lot of these companies are going to report improving margins as inflation becomes less of a problem, and they're going to basically report more positive net income than this past year and earnings per share as well. So if anything, they should command a bigger valuation over this next year than they've commanded over the last year, okay? But nonetheless, if that plays out, yes, we'll get probably a crash, okay? Now, number three of these four ways this could happen, okay? And then we'll get into my odds of probability that we would have a stock market crash in 2023, okay? And this is obviously extremely important, this number three, okay? And you can make an argument that this is the biggest reason why we would have a stock market crash or would not have a stock market crash in 2023, okay? And this has to do with inflation rate, okay? Now, why does this matter so significantly, and why could we crash the stock market if inflation starts to tick up again, let's call it in the summertime or in the springtime, if we had a scenario like that play out, okay? The reason the stock market would crash in that scenario is that would put the Fed into a situation where they'd have to come in with more aggressive rate hikes again, 50 basis points, 75 basis points, and no one's expecting that. And the Fed would be in full-scale panic mode, and the market in general would be in full-scale panic mode if we saw inflation start to go up and up and up again for whatever reason, okay? And all of a sudden we went to 7% again, 8%. The market would flip, okay? It would be nasty. The Fed would be freaking out and panicking. Everybody would be in full-scale panic mode. There would be massive capitulation if that happened, okay? I don't see that being super realistic, and I'll explain why I don't see that being super realistic in general, right? And by the way, trueflation This is my number one source I like to track for the, what realistic inflation is, right? They had us up in the 12s back when, the Fed had us kind of in the 8-9%. I felt we were probably more toward that. And, right now they have us at a 5.25%. So I just feel like their numbers are more reliable than the government numbers. I know it's surprising. We can't always agree with the government numbers, right? But at the end of the day, inflation's not super likely to tick back up in a substantial way, right? We don't have a super hot economy right now. Supply chains are running smooth again. That was one of the huge concerns that we had, right? The Fed's got rates really high, so it's hard to get an overheating economy. Housing's slow. Obviously, right now, we just talked about that, right? Also, if you think about this on top of that, right? If you have a slower economy, then you're not going to continue to get services inflation to be what it's been, right? Or goods inflation in general. Those will be much in a slower rate. On top of that, commodities, okay? Folks, and I've gone through this in videos recently, commodities have fallen off a cliff since where they were back in the spring, summertime. One of the huge reasons you had a gauntlet of high inflation numbers was because almost every single commodity out there went to the moon. I don't care if it was eggs, or if it was oil, or if it was natural gas, or if it was the price of oats. Everything went to the moon back in the spring and summertime of 2022, right? And then they all started to fall as we got later on in summer, and obviously as we went into fall and winter, okay? And if you're talking about another huge move for commodities, it's a possibility, but it's not very realistic, okay? So just understand, yes, if inflation went high again and stayed high, yes, we're going to collapse this market again, because then everybody's going to worry about stagflation. They're going to worry about the Fed having to raise rates more in a weaker economy, which would cause much more damage to the economy. And then people would be talking about maybe unemployment rate going to 8 to 10%. They'd be talking about, obviously, companies being in a horrible position that have big amounts of debt, which is actually a considerable amount of the Dow stocks and S&P 500 stocks run with a lot of debt on their balance sheet, right? And, you could talk about you'd kill off VC money. I mean, it would be ugly on a lot of different fronts if that happened, right? So let's hope that doesn't happen, because that would be pretty scary. It'd be very, very scary. But nonetheless, not super realistic, but it is a possibility, and it is something we have to understand, okay? The fourth way, and then we'll get into my odds after that, okay, is some sort of black swan event, as they call it in the stock market, okay? So this is some sort of event that no one saw coming, and it just causes chaos in the markets, okay? A good example of a black swan event that happened in 2022 was when obviously Russia decided to make their move in Ukraine, right? And that was a black swan event that most people didn't see, and it was like, wow, they really went in there. And what did that cause? That caused inflation to go to the moon even more than ever, right? It caused huge disruptions in the energy sector. It caused a commodities extreme bull cycle, right? And it caused the Fed to have to, if Russia never made that move in Ukraine, the Fed would have never had to raise rates nearly as aggressively in 2022 as they did. But since Russia made that move, the Fed had to do what they had to do, right? And so you never know where these things can come out of that just you never expected, right? Maybe something happens with, let's say, China, Taiwan. If something happened there, believe me, that would be a black swan event. And that would be a, a moment in time where, unfortunately, the market would drop, potentially 20, 30, 40%. And it would do it in a matter of a month or two. It wouldn't take very long. And that's one of the reasons you have to stay away from things like margin, short-term call options, stuff like that, because you never know when one of those things can happen and just completely wreck your portfolio, something you never saw coming, right? And it's like, oh my gosh. And so that's why it's like, if you're investing your own money, fair play. Fair play, that's perfectly fine if you're investing your own money, right? Because if your account goes down, something crazy happens, China decides to go into Taiwan, we got all of a sudden the whole world's freaking out, people thinking WW3 is about to happen, right? And next thing you know, the S&P falls 25, 35%. If you're in margin in a situation like that, you could have almost your entire portfolio wiped out, okay? If you have your own money invested, so you go down 25, 30, 35, 40%, whatever, on your portfolio amount, okay, cool, right? And hopefully once that situation's fixed, your account comes back. But when you're on margin, it's a whole different situation. You can lose your entire portfolio. That's the super scary part of that, okay? So nonetheless, let's hope there's none of that. I feel like we had several black swan events over the past few years. And, it's kind of like, I feel like we're due to not have some for a while. Rona was a black swan event, right? Once in 100-year health event like that. Like, come on, man. Are you serious? Inflation going to 9% plus, Russia going into Ukraine. Like, those are several different black swan events we've had all in just the past few years. So if there's a time period when it's like, could we have some normalization and not black swan events? It's like, let's have a few normal years, please, here. Just a few normal years without any black swan events that cause pure panic and capitulation out there in the market. So, but nonetheless, if we have one of those, that's where you can see another market crash, okay? And so it's important you understand that that's part of the game. Now, in terms of what are my odds that I see us having a crash in 2023, meaning a 20% plus drop in the S&P 500 from where we're at right now, okay? I would put the odds like this, okay? I would put it in an 80-20. 80% chance we don't have anything like this happen, a 20% chance that we do have something like this happen, right? I definitely see there's several different worries out there and problems on how we can get there. I just ran through 4 different scenarios, right, that could get us there. And so because of those scenarios, which I don't think any of those are super high probabilities, I think the mortgage rate one, I think there's a good chance that mortgage rates will go down starting in the springtime and into the summertime. It's not a for sure, but I think there's a higher probability of that happening than not happening, okay? I think when it comes to S&P 500 earnings, I think they're going to strengthen as 2023 goes along, not weaken. So I don't think that's super realistic. We obviously spoke about black swan events. I mean, we had so many of them in a row. It's kind of like, dude, like I think we're due to like not have any black swan events for a little bit here and kind of chill out, right? And in regards to inflation spiking higher, the signs aren't there for having another huge spike in inflation. That next thing you know, we're at 6s and 7s and 8s on year-over-year numbers again. And especially when we're comping against last year's numbers, I just don't think it's very realistic at all. So that's why I put it an 80-20 probability there. And it's more likely we're not going to have that scenario, but it is a potential. And so you have to just be ready for that. You have to be mentally prepped, and you have to understand what could get us there if that was to happen, okay? I hope you guys got a lot of value out of today's video. I appreciate everybody joining me. These are subjects, obviously, we have to talk about from time to time, just so we're mentally prepped on what could potentially happen out there. Thank you, every single person that enjoys the channel and wants to support us on Patreon. It's $10 a month on there. It's like $2.50 a week, and you get access to see the stocks I am buying and selling, as well as the entire portfolio in that one, the Patreon portfolio. I appreciate everybody. Much love, and have a great day.